This is the Let's Get Real Estate Show with your host, Danielle Chason.
Full-time investor, strategic consultant, motivational coach, sought-after speaker,
and host of your #1 real estate investing show, Let's Get Real Estate,
where real people are doing real estate.
Hey everybody, it's Danielle Chason here, and we're back with the Let's Get Real Estate podcast. This is where I bring to you real people doing real estate. And today we've got on the show Ping Hsu. Did I say that right? I don't even know if I said it right.
Yeah, that's right.
Okay, Sue. So the H is silent. I was like, I'm not even sure. Okay, so we got Ping in the house. Woo woo. Hey Ping, happy to have you here. Yeah. So for those of you who don't know Ping, I don't know how, because he's all over social media, and we might even talk a little bit about how to make money on social media. That was a big part of Ping and his partner Andrew's brand and building out their business and scaling it up was through social media. But they have the Property Hustlers show on YouTube. So go check it out. Make sure you subscribe to that. Lots of great value and content. And also check him out on Instagram. So it's Ping HSU is his last name, Hsu. You'll find him there. And honestly, guys, one of the reasons why I love these two guys and Ping and his partner Andrew is because they are constantly leading with value. And you're doing that today, Ping, because you're coming on the show. You're, generously committing your time here to be on the show, and I appreciate that. So thanks for being here.
Yeah, no, awesome to be here, and I hope I can provide as much value to your audience as possible.
Absolutely, yeah. So today we're going to talk about monetizing real estate, and like Ping said before we jumped on and started recording, he's like, so many people just want to play the equity play in real estate, and there's so many different ways that you can multiply your income. So creating multiple sources of income within real estate is never more important than today, because now we're kind of back into a more quiet market. We don't have that appreciation like we did for almost the last decade leading up to 2022. And so now in 2022, people don't have that equity anymore, and they can't just refi after 18 months and cash out and then take care of their income by doing that. Now it's like, no, you need to actually create income from somewhere. So for those of you who want to be full-time investors, listen, when you're buying a property and you're renting it out, there's no income until you've had that property for, 7 to 10 years, when you have some turnovers, and you're able to collect that higher rent and create that cash flow. So if you want to be a full-time investor, let's find out how to create some income. So let's talk about that, Ping. What happened in 2022 that now people have to scramble and figure this out? And even yourself, you and Andrew are talking more and more about, finding ways to monetize in real estate.
Yeah, I think being cash poor is a very common problem for a lot of real estate investors, especially when BRRRR method has been overhyped in the past, like I want to say even like 3 to 5 years. And if you really think about the concept of burning the property, it's like people call that exit strategy. I never agreed to that. I think it's part of the process for you to scale up your portfolio. So you're kind of getting yourself into the expansion of that portfolio, which means you're taking a loan out. But that's not really an exit. That's a loan. That's not a capital where you can just utilize or spend however you want. It's a loan that you have to reallocate into a income producing asset. So that basically tells me that whenever you're going through this process, there's not going to be cash flow, which means the moment that investors are over focusing on doing the BRRRR method, you're going to be cash poor because there's no way for you to draw additional income. You're constantly expanding your business. So the way that we look at it is that whenever we need to scale up or even invest into real estate, the number one thing is also the cash flow of the business. It's not just the cash flow of the rental properties. It's like you have to look at two different avenues and where you're drawing your active income so that you can consistently doing the real estate investing long term. We came across with a lot of people who are doing investing, scale that up to 5, 6, 7 properties, but still have to have a full-time job. And that concept just doesn't sit well with me. So whenever we talk about real estate investing, we always want to make sure that number one, it has to cash flow from the property standpoint. Number two is the moment that we don't have enough active income, we need to figure out a way to monetize. And There's multiple different ways to do it. One of the ways is through services. So, for example, when you're structuring a deal, I think number one thing that's really important is you want to be building in that acquisition fee as a managing partner. I think that's the number one things that a lot of people kind of neglect. And then they try to, and then in between, there's a project management fee, property management fee that you can sort of build in. And then towards the end, if the deal size is big enough, there can be a disposition fee. But at the same time, for something that's less than 4 units, you may not be able to build that in. But what I'm trying to say is that the moment that you can build in some service fee, it's totally okay to drop your equity shares to the investors, because number one, it's going to help you raise capital even more effectively. And number two, you're drawing the active income, like as you're progressing or building your business with your investors. So those are the things that we always pay attention to. If you're not doing that, it's going to be very difficult to maintain your full-time job while growing the business portfolio with your investors. And the truth is, I would never, if I'm on the other side, if I'm the money partner, I would never invest my capital into an investor who also has a full-time job, because that just tells me that that cannot be your a full-time priority, right? You have your full-time priority as your like for your job, and this is kind of like a side hustle for you.
Yeah, it's kind of a double-edged sword though, right? Because some people might say, and I've heard this out there, it's like, oh, well, when you're raising capital for the property and the purchase of the property or the renovations of the property, you can't be dipping into that, because then, to pay for your own wages or whatnot, because then, what's the lender going to think? Nobody's going to lend against that. Or if you don't tell the lender and then they find out, then they think, you're dipping in, and maybe it's being a little bit unethical. So how do you deal with that objection?
I actually never had that objection, because how I explained it is that if even though I'm the active partner to coordinate everything, but the moment that I am not able to fulfill my part of responsibility, we need to have enough budget to pay for the third party to fulfill that responsibility, right? So the way that I structure is that we're not doing 50-50, right? For anything smaller deal, I might say, okay, listen, I'm more than happy to provide 60% or even 65% of the profit sharing to you. But and I'm dropping that down so that we can have a little bit more profit for the passive investors. But then what we really need to do is to start budgeting every single services. And if I can fulfill those responsibility, I'm going to get compensated, but at the same time, I'm willing to offer a bit of discount on my service. And this really tied in well, because number one, the investors will feel like, okay, the structure of my deal, unlike any other investor's pitch, where I'm going to be fronting 100% of my capital. Now I'm fronting 100% of my capital, but not only do I get 65%, I also know that there's enough reserve fund that I can pay out to other vendors if needed, right? So the moment I explain sort of like the logic behind why we're doing what we're doing, it gave a lot of comfort to the investors, and investors also don't feel like, man, why am I giving you 100% of capital and you take 50% of profit? So the moment that that method is overdone, we try to take a different approach to kind of adjust our pitch.
Yeah, and I like that approach, because I think transparency is always critical in having long-term relationships. I think if you're being transparent with your lenders, and it sounds like you are, you build the numbers right into the sheet and you're sharing that with your lenders, where there are some investors who don't do that. They just say, this is the deal, and then they get the money and then they start dipping into the pool of money. And I think that's where you might come across some problems. So if you're
Yep.
able to be fully transparent, build in these costs, say, look, we're going to need to have a property manager. We're going to need to have, somebody deal with the disposition. And, if you happen to be a licensed realtor and you can do the disposition and take that fee, there are ways for sure where you can do it ethically. But I think transparency is key, right?
Yep. You just need to make sure that everybody is on the same page, and then there's no question, right?
Absolutely. And then I like your methodology too of giving a little bit more to the lender, to the capital partner, I should say, giving a little bit more equity. And then that's how the full-time investor, the working partner, can balance making an income today and continuing to build wealth in the future, right?
Exactly. I think there's a short-term play versus long-term play. And what I really mean by that is, first of all, if I cannot be in real estate full-time, fulfilling my responsibility, I don't think anybody can actually trust us handling the problems immediately, right? Because my priority is still going to be my full-time job. That's number one. Number two is we always try to switch up our strategy a little bit. We like to go with at least minimum two strategies in every cycle of the real estate market, because we all know it goes up and down, right? And sometimes you do need to hold. But when things are going good, you don't want to just focus on scaling. You also want to sort of figure out a way to kind of cash out from each project, right? At the end of the day, real estate is a vehicle. Real estate is not something that we should be emotional attached, thinking that we will never ever sell that specific property. We got in for the monetary reason, right? It's not really because we are so in love with that piece of real estate. So for me, I always try to make that logical decision, and then kind of look at from the high level as a business owner, thinking that, okay, if I can draw a bit of income from this project, that project, I don't want to be hold on to it forever, because it is really important for me to recycle that capital and create a compound effect over time.
So outside of these service fees, you talked about, you know, the acquisition fee, the disposition fee, the property management fee. Is there any other fees that you see that we could maybe build in or consider? And by the way, just for people that are listening, you don't have to build in all of these fees with each deal, because it might
Exactly.
actually ruin the numbers and kill the deal for you, but maybe one or two. So these are just ideas for you to consider. So is there any other fees out there for us to consider?
Yeah, you know what? That's a great question. So it all depends on what resource you have. I understand that everybody's situation is different. I'm gonna try to answer that question a little bit carefully, because everybody does have different skill set, and then based on their skill set and their current situation, my advice would be slightly different. So why don't we do this? Let me kind of break it down into different phases. When we first started out, it was really important for us to have that acquisition fee plus the property manager fee, because when we were first starting out, we realized that whatever we're doing, it just needs to generate a bit of cash flow. And then we want that the cash flow to be upfront. Even putting the tenants into the units, we also charge a 50% of a 1 month rent as our operational revenue, right? And we explain that to all the investors upfront. Hey, we need to do this. We just need to budget things accordingly, so that when we're not able to fulfill that responsibility, at least we get to outsource it to other people. And because the timeline was 3 years. We typically try to structure no more than 3 years. So from there, they understand that, okay, over time there's going to be a bit of appreciation, and we just need to outline all the service fee in between. So initially, that's what we did. And then as we're growing our property management business, and then also starting acquiring some rental properties with some partners, we realized that, you know what, we uh, we noticed that investors are transacting real estate on a regular basis as well in our property management business. So from there, at that time, 2017, we did a quick math. We're like, okay, a lot of our clients that we're working with, I think at the time was like 30 or 40 clients, and they all have their own strategy. It could be long term, short term, but we take the total transaction buy and sell of these clients, divide by the total number of clients that we had. We noticed that one investors on average will pull a trigger every other year. And then we're like, okay, if we have 30 or 40 clients, if I can get my license, like realtor license, I can be the person who's helping them expanding or restructuring their portfolio. And that itself will give me 15 to 20 deals, right? So 30 to 40 divided by 2, 15 to 20. And then right there, things just clicks, right? So I think the whatever you want to do in terms of monetization, it has everything to do with what kind of resource you have, what kind of clientele you have, what kind of skill set that you want to have, or you want to develop. And then from there, you can kind of figure out exactly what you need to do. So that was the very beginning. Now, going into 2017, 2018, where we started monetizing is actually through a real estate license, because now the transaction start picking up. We have the clientele. We know that they're all investors, and we have the trust system in place because we're providing a service to them. So now real estate license and selling real estate became our way to monetize it in real estate field. Going into 2018, cash flow becomes a big issue for rental properties, right? Because when we first started back in 2010, student rental, we're looking at easily $600 to $700 the moment that we can put 6 or 7 rooms. 2017, 2018 is down to like $200-300 only, right? So at that time, the way that we monetize is that, okay, why can't we build in a flipping business in our business model? Because number one, there's a synergy with us raising capital from the existing clientele that we had. I think 2018 we already had about like 80 or 90 clients in our property management business, and that's where we're like, okay, real estate services is already in-house. Now if we can also make them a different offer to these same pool of investors about raising capital, investing into our flipping project, like investing into our flips, this is where we can building the acquisition fee. We can do the project management for profit sharing. So that's second. And when we sell, we're also a sales team. We can also keep that 2 to 2.5% of a listing um, commission, right? So it kind of makes sense for us to kind of develop it this way. And then we're just finding different ways to generate more active income, but we're giving out a lot more equity shares back to the investors. So just to keep them happy, and at the same time, for us, we're every single month there's a multiple different stream of income coming into the business. That's how we can further scale up our team.
Yeah, no, I love that. And then there's other ways too. And just to reiterate what you're saying, it depends on what your skill set is. So for those of you who are listening, this is one example of how Ping and Andrew did it, where they went vertical with their business to generate some income. And they did it through the real estate fees, also on the acquisition part, because like if you have a client that wanted to do a flip, for example, and you're finding the deal, sourcing the deal, you're buying the deal, and then you're getting that acquisition fee, and then you may even, because I know you guys do your own construction in-house, and so just to be clear for everybody, they don't do construction for other people, just on their own projects, and they do their construction in-house for their joint
Project.
ventures or partnerships that they do. And then you could even charge like a project management fee. Like, so there's all different ways that you can do it depending on your skill set. So if you're a contractor and you want to work with a JV partner on a deal, you say, hey, I can flip, and then you can maybe put a little bit extra on top, because you would be paying that to a GC anyway to do the work. And so you can build that cost into the project and then pay yourself, right? So there's that. Like you said, the tenancy placement and asset management fee is very common on larger buildings. So you have a property manager that you pay for the day-to-day operations, but then as the working partner, the managing partner on the portfolio, you can charge an asset management fee on that asset, which is whatever the percentage you agree to, 1 to 3% on the revenues of that asset. So there's a whole bunch of different ways to generate income in real estate that's beyond the equity play that Ping was talking about, right? If you want to
Yep.
be a full-time investor, you have to pay yourself for your time. Otherwise, you're not going to be able to sustain your business long term.
Yeah, and just to adding to your point, for anybody who's very hands-on running a construction or they're a contractor themselves, right? The synergistic approach would be, hey, maybe you can also add on the permitting process, right? And like basically try to look at your core business. What can you do to expand that business at the front and at the back? So, for example, before you get into the construction, maybe prior to that is the permitting process. The step after your construction, maybe it's the cleanup, maybe it's the tenant placement. If you build this all in, all of a sudden you give yourself an unfair advantage because you're no longer just sticking into one aspect of business. You're taking care of the whole business for the investors, and that itself can be a premium charge because your investor or your clients is literally paying for the convenience. So there's a lot more things you can charge in between. So a lot of people talk about just increasing the volume. Is correct in the sense that if you want to kind of scale that up to let's say certain size of volume or sales volume for your team to facilitate, let's say, your payrolls and all that stuff, you just don't want to overscale that. And then once you get to the sweet spot where you're the most profitable, it's time to add on, kind of expand your avatar or the service to the same avatar. I don't know if
Yeah.
that
And
makes sense, but it's just like
oh,
the
100%.
integration is important. Yeah.
Yeah. And you know what? It's vertical. It makes sense because they're all intertwined. It's all in the same industry. It's not like you're going out there and, you're going out there and, you're trying to do this with real estate, but then you're doing something that's completely non-real estate related, and I don't know, washing windows, or I don't know, driving an Uber to create income. Like, it's all integrated, right? And it all goes hand in hand. I mean, you can have a landscaping business and then offer that as a service as well, right? And the nice thing about having it on as line items when you're doing your due diligence and underwriting the property and the project, the deal, whatever it is, and you have those as line items, you can't possibly, here's the thing what people don't understand. You can't be the one that fulfills everything all the time, because as you scale your business and you have more properties, you're going to have to start paying somebody. So if you're not having these fees up front as a line item on your due diligence report, on your spreadsheet, what's going to happen is now you have to fulfill that to your partners, because that was a promise that you said you'd fulfill. And you don't have the money to outsource that so you can continue to scale. So having that as a line item gives you the ability to hire somebody. If you have 10 properties, now you can hire a landscaper. You don't have to be the one now that goes out and cuts the grass, right?
Yeah.
Or shovels the snow. Or you can hire a third party service that does tenant placement and then show them, this is how I want you to vet my tenants, and here, go have at her. This is what I'll pay you, because that's what you have allocated, right? And so it makes complete sense to me. It allows for scalability and allows you to start growing your business and start running, like, and that's how you guys have done it. I mean, you guys have a lot of doors under management, and it's just a beautiful way to do it. If you don't input these fees, then what's going to happen is you're going to be a slave to managing your own properties, and you will hit a wall because you can only do so much yourself, right?
Exactly. Yeah, exactly. So that's why, and by the way, there's two other things I kind of want to mention within this topic is number one, this is the best way to build your trust with your investors. The amount of, I guess, the contacts that we're able to accumulate was literally through a bunch of little services like this. And because we provided service, they had great experience. They eventually become our investors. So a lot of people kind of miss that aspect. Doing service or building service, it's not as I guess to a lot of people, all of a sudden they were like, okay, we just want to stay in being a real estate investor, but at the same time the scalability of that context is very limited because we're doing one-on-one relationship building all the time. But the moment that you're running a business, monetizing that business, all of a sudden you can facilitate 10, 20, 30, or even like 100 clients at the same time. All of a sudden this 100 clients start building that kind of loyalty and trust with you, with your company, because you're talking to them on a regular basis. So it becomes very easy for all of us to pitch our deals, our next deal, to these investors. So that's number one. Number two is to just figure out a way to automate and try to pull yourself out of that operation as soon as you can, right? Because like you also don't want to become so tied in with your operation where you don't have any free time.
Yeah, it's the difference between working on your business and in your business, right? I mean, the goal is to get yourself to a point where you're working on the business. I mean, essentially, and that's like the rich dad, poor dad model. It's like, the rat race, right? You get stuck in the rat race, you build your business and you're in it. And then you want to be on the outside. You want to be working on it where you're not stuck in the rat race of running it yourself. So yeah, I totally get that. Now let's talk about, I don't know if we want to talk about raising capital or making money on social media. I think we're going to stick with the whole making money kind of theme. So let's talk about how you can leverage social media to make money, because that's also like another avenue where you can tap into to create income. So let's talk about how you guys have done that a little bit.
Okay, so the end goal needs to be very clear before we started the social media. We actually wasn't really building any social media presence up until almost like 2020. Prior to that, we didn't feel it, just mental barrier, I would say, right? The limited mindset. We never thought it was going to be something that's going to be very useful or beneficial to our business. Or I want to say maybe we knew, but we just never actually prioritized until we started seeing some of the investors getting into the real estate field and they started teaching. And then we were like, okay, we want to kind of gather a little bit more information and see what their business model is. And then we realized that they're way behind, and the stuff that they're teaching is very they haven't gone through enough real estate experience to actually be in that position to teach. And that's what triggered us. We're like, you know what? If this created so many more opportunities for them to raise capital, to do bigger deals, to do whatever within such a short period of time, we're being outcompeted. So we're like, okay, that's the main trigger point for us to kind of get into the video production and then just getting ourselves out there. Um, but then after we started trying it, we're like, okay, this is actually a lot of work, right? You're thinking about the viewership, you're thinking about creating that awareness, and what kind of brain image do we want to actually develop ourselves? So we had to step back, look at our business model, and look at, is this going to fit into any part of our business? And we came to the conclusion that yes, it will if we're continue doing the investing side. Okay, so the way that we look at it is that our top of funnel was so narrowed, even though we had at the time, 2020, we have about 120-ish clients that we're servicing on a regular basis. And on top of that, we also have about, like, I think close to 300 or 400 people in the real estate transactions that we're touching base on a regular basis. But the top of funnel was only about, like probably 500 people only. And then we're like, how do we actually double this or 10x this? The only way is social media. Because if nobody knows what we're doing, it's really hard to actually get them into more like a warm lead and then kind of close them on any sales or as investors. So that was kind of the original idea. Okay, we need to build that up as much as possible. And then once we do that, we realize that, okay, there's a multiple different ways that we need to put our effort into, right? By providing entertainment type of a content, or we need to be providing a lot of value. And this is why we're doing the 4-week training. Number one is to train people to actually do deal sourcing and even like raise a bit of capital on their own. And the reason why we're doing this, there's two reasons, and I always keep it very transparent. Number one, some of the investors who join our training, if they understand what we're doing, if they like our business model, and they don't feel like they want to go through all the work, guess what? You can be our investor. That's number one. If you want to do it by yourself, and you're like, okay, I'm taking a lot of good information, and then those are actionable steps that I can take, and I can start seeing some result. Great. At some point, I'm pretty sure they will be having either too many deals in their pipeline or too many investors that they can facilitate. That's where we can create the business opportunities with each other. Number three is if someone just wants us to show them exactly what to do. Okay, there's a one-on-one accountability coaching that we can actually offer. We do 1-year program, and then we have a lot of success with our members already this past couple years. We can also help you get to where you want it to be. So that's kind of the reason why we're doing the social media, is to really start creating the business opportunity for ourselves, and to overcome the scalability or limitation of the scalability of our current business, because we're using the program 4-week training to connect with more people and kind of use that to recruit the talent.
Which is absolutely brilliant. And I think that's where a lot of people miss, because they get out on social media and they're putting out a lot of content, but they don't really have a clear intention behind it. So you're building the brand, but you're not necessarily building the business. And so you have to have that intent behind it in order to be able to monetize all of the time that you're doing in social media. Now, I know you guys put out a lot of stuff, and I think there's a lot of people out there that they think social media isn't that much work, or it's not that hard. You just got to like do a recording and post it. But there's a lot more thought behind that. And I know for you guys have taken it really next level for everything that you've done. So do you want to talk about a little bit about the things that you do in social media in order to get the viewership and attract the right people? And like, did you build out an avatar? And what is an avatar for the people that don't know this language?
Yeah, so avatar means that your audience, right? Basically, who you want to service, like the audience that you want to service to. The way we look at it is very simple. Whatever we're doing, if we're going to put in that much effort and then commit our time on a regular basis, there has to be some sort of metric that we should be, watching, right? Because everything we're doing needs to lead to some sort of result. And if it's not leading to some sort of result, we either need to decide, hey, maybe it's time to shut it off, or refocus our energy and focus into something else, or we need to kind of stick to it until it gets better. So with our social media, Honestly, even right now, there's still a lot of things that we're experimenting at this moment. We're still very new in this industry, sorry, in this field, like this space. But the way that we're overcoming a lot of questions that we have is through reps. Because from doing one video a month at a time, like 2020, to a couple of videos like every 2 weeks, it's like we're not gathering enough data, and then we don't know what's good, what's bad. We think it's good, but it's not necessarily going to get us the viewership. So we at some point we decided, okay, listen, we need to just commit to this, put out as much content as possible. And when we first made that commitment, we're pushing out minimum one quality, like long form content a week. And then we realized that, okay, it's still not enough data because the viewership is not going up. So we need to now compensating with even more videos. So for the first 3 months, I gotta be honest with you, it was very demoralizing, right? Because the viewership isn't going up, right? And then there's so many things. All of a sudden, we started learning about thumbnails, click through rate, right? And then like basically when YouTube shows our videos on their platform, if people are not clicking in, less than 4% of people clicking in, that means that our thumbnail is not great. After they click in, there's also watch time, right? All of this will contribute to YouTube promoting our videos. So we're constantly in the phase of collecting data. Long form, short form, why is short form performing way better? Oh, it's because now attention span is getting shorter and shorter. Now people's expectation is much higher when they're watching a video. If you don't get straight to the point, they will lose interest. So we're trying to look at all the different metrics, and we want to make sure that we're getting better and better at this. So a couple different metrics that we're seeing here is combining with long form and short form. We want to be beating our previous month in viewership every single month. If we're not doing that, we have to reset and really figure out why that's not happening. Okay, and then so I think last year, the entire year, we only had about like 250,000 views on our YouTube channel. This year, actually this month, this past 28 days, we already have over, I think, 350K views all across platform, which is
Wow.
still not a lot,
Yeah.
because our goal is to figure out how to hit that 1 million viewership every single month. And I know we can, right? There's so many people in Canada, so many people in the US. I know we can do that. So we're just kind of constantly collect data and then make sure that it drives into that direction. Now, outside of this, we also look at the closed sales, our service, investor, even people who are seeking for mentorship. These numbers has to go up every single month as well. And if not, we need to kind of look into our marketing strategy, our production strategy, versus even like the way that we handle our onboarding call or introduction call, discovery calls, and all that stuff, all the way to the fulfillment process.
Yeah, and that's a lot of work. Like you're saying this, and I'm familiar with it because I'm doing it, but obviously, people that are out there listening that are maybe thinking about doing this, I just want to give them a taste or a flavor of how much, like, if I was out there right now, just in the audience listening, and I go, okay, like, Ping, this sounds great, but I don't have time to do all of that. Like, I'm busy running my business. Like, you're talking about doing more videos, you're talking about looking at the metrics and collecting more data, watching the click-through rate and watching the viewership rate and comparing it to the last month and compared to year over year. And like, who has time for all of that? So how do you guys manage all of that?
Okay, so we're obviously facing the same issue. We have three active business that we're running, and then on top of that, there's a property hustles channel that we're monitoring. And every single week, we need to commit 1 to 2 days in production, and obviously looking over the numbers and all that stuff. So it is tough, and the way that we overcome this is, I think Daniel, you and I talk about being the visionary versus finding the integrator, right? And finding the integrator meaning this person needs to be able to do the top-down method where whenever we need someone, we're not the one who's learning or interviewing the team members. We're using this integrator to kind of figure out what the business structure should be. And as a visionary, we try to plan things out. We try to make sure the direction of the business is clear, and then we can essentially have that integrator, our production manager, to figure out how to fulfill the back end stuff that we need them to do. Because at the end of the day, action leads to data, and once we have the data, we can do the adjustment. right? So we just want to make sure that we are always clear with what kind of action, what kind of a metrics that we need to have. And Logan, our production manager, is going to help us fulfill that 20 pieces of content every single week, so that we have the data to analyze. So to answer your question, it's all about top-down management. And if the integrator is unable to fulfill that responsibility, guess what? There's a couple ways to do it. Is either we need to find someone with more experience as an integrator, or we need to hire a coaching company to kind of walk us through, sort of like a consulting service to kind of walk us through exactly what we did correctly and what we're not doing correctly.
Okay, so for anybody who's listening, I'm going to just like package this up for you a little bit, because like, well, I can't afford an integrator. I can't afford a coaching package. But this is how it works. You start off just like any other business. You're doing the work yourself first. You got to build that up. If you're doing it right and you start getting you start monetizing what you're doing on social media, that monetization now can go towards that integrator, can go towards that coaching program. So ultimately, you want to get out there. You want to land a couple of deals. Maybe it's a couple of lenders that you're going to be landing. And so you're able to maybe do a couple of flips because you've got some lenders that you got from social media. That's generating income. So you want to take a portion of that and then roll it into hiring an integrator. And it's not an all or nothing thing. It can be somebody part-time in the beginning, right? So you hire that production manager, hire that integrator, and it could be your teenager. It doesn't, your nephew. Who knows a little bit about this, who's in university and needs a little bit of extra cash, right? And say, look, this is what I need you to do. Now, what's really critical is that you, as the visionary, as the business owner, you must understand what you want done in order to give this integrator, this production manager, some direction. So you have to invest in yourself, take a course. It doesn't have to be expensive or complicated, but you need a base knowledge. So get out there, get the knowledge of how to post and how to be intentional with social media. And then you can give some direction to somebody else to do it part-time until you start growing. And then, you start monetizing a little bit more. Maybe you can pay somebody who's educated in that space full time. And so that's how you kind of grow the business, right? Ping, am I wrong here? Or is this does this sound about right?
No, 100%. I kind of explained it in a way that we already have the business to subsidize our production in the very beginning.
Mm-hmm.
So we did have some cash that we can, or capital that we budget to actually launch this, so that we can grow quickly. Now, if I were to start it out, this is actually what we're teaching our members, that if you're just starting out, you just want to like get into the get into the real estate, and then have a social media as a tool to generate some awareness. How I would do it, I actually show them our funnel, exactly what we generated awareness, and then move them into the warm leads and into hot lead. But how I would do it, if I were in their position, is that I would literally just go out there, right? First thing first with real estate is that you need to actually put yourself out there in networking events, even like looking at some deals, right? Just go out there, look at properties. All those are going to be a great opportunity for you to film something, post it on your story, post it on your reel, right? And these reels will eventually catch some people's attention around you, friends, families, colleagues. Someone at some point will actually react to your post. And from there, you can, based on the content or response that you're getting, you can kind of do a bit of soft pitch to them and see that, hey, are you or do you know anybody who might be interested in the in investing in real estate? And right there is how you can leverage social media in your, like, to invest in your next project, right? So we go through that kind of motion with a lead gen, self pitch, and then you need to self qualify. And this part is where kind of coaching comes in, or some self education needs to come in. You need to understand how to structure a deal, and then the last one becomes your hard pitch. You need to present your deal in a correct way. So
Absolutely.
to answer this question from anybody who's listening, it doesn't need to be super complicated. It can just be as simple as, hey, I'm just documenting my journey, and then whoever reacted to it, let me reach out to them and see where they are.
And you know what, honestly, for anybody who's been following me for as long as I've been doing this, that's what I did. Back then it was Facebook Lives. Instagram wasn't a thing. And I was doing Facebook Lives. I was flipping and I was going on my properties. And I was like, hey, should I take this wall out or should I take it down? What do you guys think? And just documenting the progress of each of my flips and saying, this is what I'm doing. And man, I used to have a lot of viewers, like, and which was a lot back then for these videos. And I just couldn't understand why. I'm like, oh my God, like I'm going to post again on another house, the same thing that I'm doing at every house, but everybody was watching. And then if I didn't post, I'd start on one. And if I didn't post in a few weeks, I'd get DMs saying, hey, what's going on with that property that you showed us a few weeks ago? It was like, wow, okay, people really want this. So it doesn't
Yeah.
have to be complicated. You're right. I mean, I built my business that way. And as far as you're right with going to live events and attending these networking events, it's critical to do that, to shake the hands of people in your industry and keep your finger on the pulse of what's going on out there. But the benefit, to your point, is the ability to have that opportunity to get some great content. And as you know, Ping, I'm hosting these. Here's a shameless plug. Like, I'm hosting these live events every month, and more people are showing up with camera crews, which is fun. I absolutely love it. I mean, we had, I think, 4 camera crews at our last event. It was like, wow, okay. And then that's on top of everybody just pulling out their cell phones and just doing some fun videos together and taking some pictures. And it doesn't have to be a video. You can just do, a whole bunch of pictures with other real estate investors, and then do a carousel post of 3 or 4 pictures, 5 pictures, and just let people know that you're out there and you're learning. And by the way, that's going to instill confidence in your lenders that you're out there and you're keeping yourself educated. And so there's like multiple layers of benefits to going out to events. So definitely, it's a little shameless plug there. You can check that out. We'll absolutely have that in the bio. But anyhow, other than that, wow, we're over time. Lots of great stuff, like amazing stuff here. What a great episode, Ping.
Yeah, no, I'm just sharing my experience in the business operation, because we're a firm believer that so not firm believer, but we disagree that real estate is a very passive vehicle, because it's not, especially in Ontario. And since we're going to be a little bit active, might as well fully maximize our productivity in being an active role. So.
Yeah, and I know some people want to be passive out there. And listen, at the end of the day, if you want to be fully passive, well, I actually heard this. I was at a networking event last night, and this is what I heard. And I was like, dang, that is so true. So you have to earn your income twice. You have to earn your income twice in order to keep up to inflation and the debasing of our dollar and all of that. And it's interesting because you got to go out there and you have to make your money on the active side, and then you have to invest it on the passive side in order to protect it and to protect that capital. Right. And so there's like 2 ways here where you got to invest your money or make your money. And if you want to be completely passive, then you have to have earned enough on the income side to have rolled it over into the investment side. And that's the only time that it's, in my opinion, I think you agree, where it's really passive. But if I have to choose between working for somebody else to make my active income or work for myself and make that active income, I'd much rather work for myself. So that's the beauty of real estate.
100%. Yeah, 100%. Yeah.
So there's some tough challenges being a business owner, but at the end of the day, everything is a trade-off, and I'd much rather have that than have the golden handcuffs in a corporate world. So on that note, and listen, at the end of the day, that's just my preference. It's good for other people. There's no judgment here. And I don't get to go home at 5:00 and turn everything off. But I'm okay with that. So at the end of the day, Ping, here we are helping others who may want to explore a new way of living and enter into the world of entrepreneurship through real estate, and finding multiple ways to capitalize on real estate so you can avoid being cash poor as a real estate investor. Ping, I love your perspective. I love everything you shared. Thank you so much. If you had any last words of wisdom about, avoiding being cash poor, what would it be?
Oh, to be honest, there's a lot of things I can still talk about that. But the last thing I would say, number one, have multiple strategies for your business, right? There's no one strategy fits into like all real estate cycle or fits into everybody. Everybody's pathway is different. Assess your skill set, assess your what you feel the most comfortable, right? And then try to utilize that skill set and turn that into an income producing avenue for yourself, right? And then don't just buy a property, hold it forever. Have a couple different ways for you to draw some active income. That's the only way that you can get into real estate full time. So yeah, that would be my I guess one additional things I can mention to your audience.
So what I heard was have multiple incomes in your business. So what I heard was business, the word business. So guys, if you're going to go into real estate, it's not a side hustle. Look at it as a business. And so if you look at it as a
Okay.
business, right, you can look at multiple streams of income. Skill set, identify your skill set, but make sure it's a skill set that you enjoy. You might be really good at carpentry but hate it. So maybe you want to improve on a different skill set of something you enjoy better, right? And then
Yeah.
having multiple strategies. So invest in yourself. Always, always, always. Ping Hsu, thank you so much for your time and your knowledge and expertise that you shared here today. So enjoyed it. I, like you, could talk about this for another hour or
Yeah,
4.
for sure.
But for the purpose of the podcast, we need to wrap it up. So thank you so much for coming on the show. This is Danielle Chason at the Let's Get Real Estate podcast signing off, where I bring to you real people doing real estate. Bye for now.